This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, stocks in the developing world were on a stronger footing today as investors bought into the U.S. Fed's view that a period of higher inflation was transitory. MSCI's emerging market stock index rose 0.3% on the day, bringing it to positive territory for the fourth straight week, which of course is its longest winning streak since January. Meanwhile, South Africa's JSE told a tale of two halves today. We saw mining stocks racing higher, while other sectors were weaker today. Platinum and gold stocks joined diversified miners in shaking off recent losses, while domestically focused stocks were lower amid a surge in COVID-19 infections in the country. The resource index was up 1%, financials were down by 1%. In Nigeria, the all-share saw profit-taking dominating today as investors continue to mop up attractive counters as seen throughout this week. Now, also coming up on today's show. South Africa agrees to sell a majority stake in the country's grounded national carrier. Leading economies meet for the G7 summit in the UK. And we test out a robot clearing the trash from Tunisia's coastline. Well, tonight we start off in South Africa, where the country's grounded national airline may soon take to the skies once again. The government has agreed to sell a majority stake in South African Airways. A 51% stake will now belong to a local jet leasing company and a private equity firm, ridding the government of an entity that has long been a drain on state finances. Well, SAA has been under a form of bankruptcy protection since December 2019, and its fortunes worsened during the COVID-19 pandemic. The equity partner will allow the airline to resume operations as, of course, the government retains a 49% stake. Well, let's now discuss the deal with Derek Nseko. He's the founder of Airspace Africa and iFly Global. Great to have you with us today, Mr. Derek. Now, it certainly has been quite a long road for South African Airways, one that has seen its workforce reduced by almost 80%, and of course now liabilities down to almost $200 million. So give us a sense of what you feel about this new partnership and the injection of $258 million. What does it mean for the future of an airline that was on the brink of collapse just the other day?
Yes, thank you so much for having me, and good evening to your viewers. Yeah, very interesting developments today in South Africa, where the strategic equity partner has finally been announced. It's been a long, protracted process for South African Airways, which is just emerging out of a business rescue as well. And what we do know is that the partner is actually going to inject about $3 billion, which will go towards starting capital for the new airline. I believe this is coming as welcome relief to not just the public, but South African government as well. And they've repeatedly pointed to the fact that they really are committed to ending this long, decade-long culture of government bailouts that has been plaguing the national airline. So the strategic equity partner will have control of the new airline with a 51% stake. And what is very positive as well about this is that the Takatso consortium is really made up of people who have been in the airline business before and people who know exactly what it takes to run an airline. And some of these experts are coming from South Africa. And what really the government of South Africa really focused on with this new strategic equity partner and they've pointed the fact that this is a homegrown solution because the companies that form the consortium are South African-based, Global Airways, and it's very interesting as well to know that the CEO of this consortium is a man who was formerly a CEO at Comair, and recently even started a new airline in South Africa. And the new consortium will actually now absorb and even have Lift Airways, as well as Mango Airlines, a subsidiary, as two low-cost airlines under its portfolio.
Right.
I do believe that these are positive developments for SAA, which needed to move away from this culture and to move towards positive corporate governance, and as well to eliminate the bureaucracies that came with government ownership and to allow a more efficient and more efficient mode of ownership and decision making
going forward. Certainly right, Derek. It certainly is a relief for the government in terms of their finances as well, but it is also an interesting time for a new partnership to come on board. Globally, most airlines are struggling to stay afloat following the pandemic. Now, factoring in the current environment in the global aviation space, are the odds in favor of this consortium being successful in reviving South African Airlines? How long will that take? And what will be the drivers of South African Airlines rebound?
Yes, it's a very interesting time for global aviation. Incidentally, there's so many entrepreneurs around the world who are actually looking at this as an opportunity to start new airlines and to even expand existing airlines. And it's no coincidence that some of the business people who are involved with this new venture in SAA as part of the consortium are people who have recently just started a new airline. Gideon Novick is the CEO of Lift Airlines. The globe is currently littered with uh, used aircrafts that are reasonably priced. And there's a lot of skilled and highly qualified aviation personnel at the moment who are desperate for work. So the barriers to entry into the airline industry have somewhat been lowered. And they're driving this move for the new airlines that are sprouting up. And in a sense, South African Airways it kind of feels like a startup that has emerged from the ashes of the old South African Airways.
Mm. Well, in light of all of this, and by that I mean the fact that 80% of SAA's workforce had suddenly left, and of course the airline had seen quite a lot of losses. So how soon do you expect to see the resumption of international flights and of course a possible revamping of its workforce going forward, especially given that the low-cost arm, Mango, and South African Airways maintenance firm, the technical, SAA Technical, they still remain under financial strain?
Yes, no doubt. And the issue of SAA subsidiaries is something that is still yet to be addressed. And we really have to go back to the fact that while this is the end of a long process, transitional process for SAAs, it's really the beginning of another process. There's still so much to accomplish before SAA gets to the skies. And there's so much that is still uncertain and undetermined, and the issue of the future of South Africa Airways subsidiaries, I think, is chief among those. The MOU and the purchase agreement with the consortium that is coming in to take up the 51% still needs a few weeks to be finalized. On the issue of flights, we do know that SAA is really emerging as a much smaller entity. They've lost about 3,500 of their workforce from the previous all through the business rescue process. And we don't know exactly how big the new SAA is going to be, but we do know that it's going to start as a regional airline, largely operating in Africa. I think international or intercontinental flights for the long haul are not going to start until maybe after about two or 3 years.
Mm. Well, Derek, thank you so much for your insights on today's show. That, of course, is Derek Nseko joining us there. He's the founder of Airspace Africa and iFly Global. Well, let's move on now to Ethiopia. The country has earned about $505 million from the gold mining sector in the first 10 months of the current fiscal year. According to reports from the country's Mines and Petroleum Ministry, Ethiopia mined more than 6,700 kilograms of gold during that period. Here's CGTN's Gerum Chala with more from Addis Ababa.
Gold exports in Ethiopia have tremendously increased over the past year and are on course to become the single largest foreign currency earner for the nation. Over the past 10 months, Ethiopia's Ministry of Mines and Petroleum had planned to deliver 5,921 kilograms of gold to the National Bank of Ethiopia, but managed to provide 6,785 kilograms of gold, with over $504 million secured in sales. The increased activities in the mining sector has also created 93 new jobs for the citizens across the nation. Ethiopia has already established several gold trading centers as it seeks to boost its income from the mining sector and at the same time reduce fraud and other illegal mining activities. The Eastern Africa country has also undertaken a mass sensitization campaign that includes all relevant stakeholders to combat contraband mining activities. Such activities in the sector have caused Ethiopia's mining sector to poorly perform over the past years, adversely affecting revenues too. Among the mass sensitization works being done is the encouragement to bring artisan miners into the formal mining market. Ethiopia is now determined even more to elevate the mining sector and earn higher hard currency from it in the coming months. And for that, the mining sector's development has been given due attention by the government as one of the priority areas of achieving rapid development for the country. Last month, authorities revoked mining license for 27 mines that remained inactive as part of its effort to boost production, including the cancellation of 63 permits in December last year. The total mining license revoked by the Eastern African nation has now reached 90. In December last year, the government approved 10-year economic plan to increase foreign exchange earnings to $17 billion by 2030 from $265 million. Group Data CGTN, Addis Ababa, Ethiopia.
And now to other corporate headlines today. Some ABSA stockbrokers customers have been locked out of their accounts, and that's following an upgrade of the platform. This has caused frustration as well as concern about the safety of their investments. Now, clients took to social media today expressing their frustration after access to their accounts was revoked for no reason. Meanwhile, British Airways has placed thousands of its staff back on furlough due to the delays in restarting international travel. The airline had kicked off its recovery by bringing people back ahead of the easing of restrictions on foreign holidays on May 17th. It is understood a large number of BA staff was already on furlough, but this change means many more will go back onto the government wage support scheme. And the auto financing arms of Volkswagen and Ford Motors plans to hold approval of new credit to car buyers and dealers in India. This follows plans to exit from the country. The finance unit has suffered hefty losses because some customers failed to make repayments. The finance unit will shut its doors by December 31st. And Starbucks has been hit by supply shortages in the U.S. as some drinks have become unavailable for customers. Other than oat milk, Starbucks has not confirmed which other ingredients were affected. But an internal memo suggests that 25 different products are on a temporary hold, including hazelnut syrup, chai tea bags, and green iced tea. And that is a look at our corporate headlines. Well, let's take a short break now, still coming up on the show. We'll be reviewing budgets out of the East African region. As well as growth projections for Ghana this year.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Nairobi. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back. Well, let's head to East Africa now, where Kenya has once again topped the region as the country with the most expensive national budget in the 2020-2021 fiscal year. Now, Kenya's budget reached $33.3 billion, surpassing Uganda, Tanzania and Rwanda combined. A huge chunk of the money will cater for spending, covering salaries and loans as well. Now, the government also plans to collect at least $16.6 billion and seek a further $8.83 billion to fill the deficit. Tanzania's budget reached $16 billion, and of course its government will collect about $9.2 billion through the Tanzania Revenue Authority. Meanwhile, Uganda's budget reached $13 billion. It focuses allocations on national security, infrastructure development, health, and economic recovery. Well, let's now get the details on those budgets. We're joined by Churchill Ogutu. He's the head of research at Genghis Capital. Great to have you with us today, Churchill. Now, what we saw yesterday was that East Africa's largest economies were not ready to cut spending, but they certainly plan to borrow more, at least $16 billion, in order to fund their economies going forward. What was the most striking to you as you took in those budgets yesterday?
Three things stood out for me looking at the budgets to the East African nations. The first one is the issue on the spending side, the customs external tariff. So the thing is, there is the East Africa community. So year in, year out, they've been trying to sort of insulate their economies from external markets. But this is coming against the fact that we have an liberalized African market, the African Free Continental Trade Agreement. So I don't think how it will bode well within that context of the liberalization of African trade. The second one, of course, was the thorny issue to do with arrears to the private sector. Kenya is one of the countries that is now quite notorious in that regard. But having said that, at least a number of the countries in East Africa, at least they had explicit disbursements that have been allocated to sort out the arrears to the private sector. A country such as Tanzania, whereas for Kenya, that is not the case. What we even heard from the CS, the cabinet secretary, he came out in the budget statement yesterday saying that all the pending arrears needs to be sorted out in 2 weeks' time, but yet they have not been explicitly allocated in the budget. So I'm still figuring out how it will be able to be done. And the last thing is now the rising debt service cost. You mentioned earlier that the overall spending plan to Kenya is around $33.8 billion. A third of that is now going towards servicing of public debt. So the past misdeeds have caught up with us and are seeing the rising public debt servicing costs. So those are some of the things that caught my eye in terms of the overall spending plans that were presented yesterday.
Well, there's also, like you mentioned, there's certainly a lot of concern about the rising rate of debts across the region. But governments are also raising taxes, as we saw, which raises questions as to how they plan to squeeze that money from their citizens going forward. Now, in light of what we see is mostly lethargic collections, and for example, here in Kenya, they're proposing amendments to suddenly help them with their tax administration and collections going forward. Are you confident that these governments will be able to achieve their budget goals going forward?
I doubt. Specifically looking at the Kenyan context, we have the Finance Bill 2021, and what even the Cabinet Secretary stated yesterday is that the total amount to be realized from all the proposals in the Finance Bill 2021 is amounting to roughly $80 million. So we are in an environment where the expected net increase in ordinary revenue is in the order of $1.8 billion. So $80 million is just a drop in the ocean. And looking at across the East African nations, looking at even it's primarily this higher revenue collection is underpinned by the expected growth projections for the next financial year. In Kenya, we are looking at going to 6.3% on average in the next financial year, from 3.8% in the current financial year. In Uganda, it's slightly lower at 4.3% in the next financial year. And the calendar growth for Tanzania is around 5.6% growth projection. So already just telling us a bit of some robust growth projections, which is underpinning this aggressive revenue collections. And of course, the other issue that you also mentioned is things to do with tax administration. And that is something that is salient across all the East African budgets. I don't know, this one thing that you can be able to come up with some increased administrative measures so as to be able to realize higher revenue collection. But in an environment where COVID-19 is still prevalent, I don't know how it will be able to amount to something which is significant.
That's true. That's quite right, because most of these governments, as you mentioned, they're actually betting on an economic recovery. Now, briefly take us through what economic experts are saying about the growth outlook and expectations for a rebound in economic activity in some of these East African nations this year. Is it that positive or is it cautiously optimistic?
Yes, the budgets were presented against the backdrop of COVID-19 pandemic. A number of the countries at least have rolled out the vaccination program. Kenya, as at the last count, we were at around 1 million people had already received at least the first dose of the COVID vaccination, which is roughly 2% of the population. Closer, we are looking at Uganda at around 734,000 persons had already received vaccination as at the last count, which is still significantly lower than the overall population. Tanzania is only that recently started acknowledging that COVID-19 is a reality to live with. So that is the context that you're looking at, even in the rollout of the recovery economy. At least for the Ugandan context, they were really explicit in terms of robust measures to be able to boost the economic prospects. Things to do with micro, small, and medium enterprises, at least that tax relief measures, which will be able to enhance even the recovery. For Kenya, we are still throwing things to the wall and hoping that a majority will stick. So we are still trying things here and there, but nothing significant that could move the needle. So it's still a dichotomy in terms of economic recovery policies.
Well, Churchill, many thanks for that great analysis. Looking forward to having you on again on the show. That is Churchill Ogutu joining us there from Ganges Capital. Now, of course, Ghana's economy is on a steady path to recovery after taking a hit from the COVID-19 pandemic. Analysts are saying the rollout of vaccines could quicken growth in the economy. But of course, a global shortage of vaccines still threatens the country's full economic recovery, as we just discussed. Here's CGTN's Nabil Ahmed Rufai reporting from Accra.
Business activities at this market in Accra are back to pre-pandemic level, according to traders here. All the shops have reopened after lockdown restrictions were eased, and Ghana's economy is beginning to recover from the disruptions caused by COVID-19. But analysts say it may take years for the economy to rebound fully.
These are early days for us to say Ghana's economy has recovered. As I predicted last year, it's going to take us between 3 to 5 years. The recovery is going to take the form of a U-shape, either than a V-shape. V-shape is normally when the economy falls, it bounces back to pre-COVID. But what we see in Ghana is that it's going to be U-shape. It's going to be gradual, and then it will pick up from where we were pre-COVID.
Last year, Ghana's economy contracted to 0.4% due to the pandemic. The World Bank has estimated the country's economy to grow by 1.4% this year.
Some sectors of Ghana's economy have been hit hard by COVID, and I can make mention of tourism. Once the inoculation goes on, the vaccination program is able to go on as effective as we wanted, then these sectors of the economy will be able to bounce back to lead to the full recovery that we want to achieve.
Ghana has so far inoculated nearly 900,000 people against COVID-19. It aims to vaccinate 20 million people by the end of the year.
But there are concerns that it may not be able to meet this target due to the global slump in supply of vaccines. Still, the government says it is working to get more vaccines under the WHO-backed COVAX Global Vaccine Sharing Initiative.
While the country rolls out its COVID-19 vaccines, experts are concerned about a threat of a third wave because many people have stopped wearing face masks and are not practicing other safety measures.
We have to balance the economic, social aspect with health. I understand that. And so the easy and the other thing had to be done one way or the other. But systems were supposed to have been in place, and that, unfortunately, are not being followed.
Analysts say the success of a vaccine rollout could help boost the economy. They want the government to step up efforts towards acquiring more COVID-19 vaccines to inoculate its people. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
You're watching Global Business Africa. We're going to take a short break now, but still coming up on the show. Leading economies meet for the G7 summit in the UK. And China introduces a law that aims to counter sanctions by foreign governments.
This has taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Over the last 14 hours of rain.
No one again began holding guns.
Machine guns from police forces toward the protesters.
Were you worried about your life at that particular time? Not at all.
The Excellency, thank you very much for your time. What is your assessment of the state of the continent today?
Africa has the potential to power itself.
Excuse me.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant.
Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Welcome back. Now, world leaders have begun their talks at the G7 summit taking place in the southwest of England. Global coronavirus vaccinations and, of course, climate change are due to be the focus of the summit between the leaders of the 7 nations. The UK has already announced it will donate at least 100 million surplus COVID-19 vaccine doses within the next year. German Chancellor Angela Merkel says she wants to see countries from across the world, including China, working together on climate protection and biodiversity. Now, UK Prime Minister Boris Johnson has also urged leaders not to repeat mistakes of the past and work together on building back greener and building back fairer and building back more equal.
Zweitens geht es natürlich dann auch darum,
Another issue will obviously be how to restart the world economy, and I'm of course happy that the American president is present here. Being able to meet Joe Biden for the first time is obviously important because he stands for the commitment of multilateralism, which we were missing in recent years. We will find strong words here in support of multilateralism and also for value-based multilateralism, which will lead to a dispute with Russia and in some aspects also with China.
aber auch in einigen Aspekten mit China.
I think that is what the people of our countries now want us to focus on. They want us to be sure that we're beating the pandemic together and discussing how we'll never have a repeat of what we've seen, but also that we're building back better together and building back greener and building back fairer and building back more equal and how shall I, more in a more gender neutral and perhaps a more feminine way. How about that, apart from anything else? So those are some of the objectives that we have before us at Carbis Bay.
Now, of course, Africa has some high expectations for this meeting, and joining us to take apart what the continent is looking forward to from the G7 leaders meeting is Professor Zachary Bolo Awino. He is from the University of Nairobi's School of Business. Great to have you with us today, Professor. Now, what many in Africa are expecting from this meeting is a realistic and clear vaccine roadmap, which, of course, talks about shared doses, access to manufacturing capacity, financing, and of course an end to hoarding. So far, looking at what has happened, has the meeting delivered on this? Are you satisfied with what you're hearing?
Now, what I'm hearing from the summit, the G7, is not very clear as to how they are going to deliver on the vaccines to the African countries. They have only mentioned that they are going to take responsibility of the delivery of those vaccines, but as to how it's going to happen, it's not very, very clear, because Africa is ravaged with poor infrastructure, economic crisis, poverty, climate change, and financial crisis. And they need to really be very clear and specific on how it's going to be done. It's a continent that is diverse. And from what has been happening in the past is that countries, quite a number of countries, have not been able to even to secure the vaccines. From the countries that manufactures them, from the source of manufacturing. And that is a very, very fundamental crisis, where only 1% of the population of African countries have been able to be vaccinated, compared to what is happening in the United States, where over 60% have been vaccinated. Quite a number of population in Europe, especially in the Great Britain, has been vaccinated. So the G7 needs to be very, very clear on how they are going to deliver on their promises, and how the manufacturing, the supply chain is going to work, especially when even now, as we know it for sure, it's not very promising. The COVID-19 effect in itself has delinked so many, the logistics that cuts across the various countries in Africa.
Quite right. Now, of course, following the recent Paris summit, we were also looking to hear more on the progress on those discussions around green recovery financing, certainly leveraging the IMF special drawing rights, how much of it will come to Africa, and of course, meeting the $100 billion climate finance pledge. Do you feel you've heard these issues addressed? And certainly, are you convinced that there is will amongst the G7 nations to make solid moves in these areas?
Now, I think the summit has just started, but again, they have not properly mentioned how they are going to look at these issues. But I have a very, very optimistic feeling that the African, the move to get this done will take place, especially on the climate change, given the fact that the United States has been able to rejoin the climate change, and given the fact that the relationship of the United States and the other members of the G7 countries is improving. So in my view, I think they are going to deliver, because there is goodwill, and the United States is taking the lead as far as we are concerned. And the Biden's government has really taken a positive approach towards getting all this done. So I think, in my view, it's going to be delivered.
Well, as you mentioned, discussions are just picking up at the G7. But how effective have follow-up mechanisms been after previous G7 meetings, especially on issues to do with Africa?
Now, the follow-up mechanism has not been the roadmap and of course, how the promises that have been made in the G7 discussions and pledges, that has not been very clear as to how it's going to be done. The follow-up mechanism is still very vague. The approach on how to get this done, the timelines is not well stated. And even all those pledges that were made in the previous summit, it is not known how it's going to be achieved. Basically, we are seeing only a situation where countries, members of the G7 are making promises, but how it's going to be achieved in retrospect and how it's going to be done is still very unclear to us. So I think those promises, those pledges should be, there should be a very clear timelines of how those promises is going to be achieved. And to my view, that is still gray, it is lacking, it is not known, and I suppose that clear mechanisms should be put in place so that we see a more robust approach of how those promises is going to be achieved, especially for the African continent.
As you say, Professor, the devil will be in the details. Many thanks for your insights today. We do have to leave it there. That, of course, is Professor Zachary Bolo Awino from the University of Nairobi's School of Business. Well, let's move on now to China, where President Xi Jinping has signed the country's first law that aims to counter sanctions by foreign governments. Here's Wang Haiyang reporting.
The law comes amid rising tensions with Western countries over issues like those in Hong Kong and Xinjiang. China says the legislation aims to protect its national sovereignty and the legitimate rights of its entities.
For some time now, out of political manipulation and ideological bias, some Western countries have used Xinjiang and Hong Kong-related issues as part of their pretexts to spread rumors, smear, contain, and suppress China. In particular, the countries, in violation of international law and basic norms governing international relations, have imposed so-called sanctions on relevant Chinese state organs, organizations, and functionaries according to their domestic laws, grossly interfering in China's internal affairs.
The law enables China to take counteractions if foreign countries impose sanctions on Chinese citizens and entities. The target group of countermeasures does not only include those who are directly involved in imposing sanctions on China, but also their families and related organizations. Those targeted can be refused entry into China, restricted or even prohibited from doing business in the country. But analysts say China will continue to protect the legitimate rights of foreign investors and foreigners in the country.
It should also be clear that the piece of legislation shows China would not impose countermeasures unreasonably. The law stipulates that only necessary and reasonable measures would be taken, and only onto targeted entities and persons. For other parties that have ties with China, China will keep on protecting the legitimate rights and interests of foreign investors and foreigners, and building a market-oriented, internationalized business environment based on the rule of law.
The law was approved by China's legislature, the National People's Congress, Thursday. Wang Haiyang, CGTN.
Now, it is the second day of the 2021 Lujiazhi Forum in Shanghai. Hot on the agenda this Friday, how will the megacity's Lingang Free Trade Zone boost and innovate China's financial sector? Here's CGTN's Chen Tong with more.
Shanghai's Lingang Special Area is expected to welcome its 2-year anniversary this August. More than 700 projects have been signed in the area, and every working day, more than 100 companies registered to be set up in the free trade zone. Many of these are in emerging industries like biomedicine, new materials, and telecommunications.
We took less than 1 month to choose the location and finish the registration. Lingang has provided a lot of help to let us settle down.
Over the past 2 years, Lingang has been welcoming companies in emerging industries, and now it's putting efforts to develop its financial industry. And the question now is how the area will differentiate itself from Shanghai's Lujiazui Financial Center. Participants at the sub-forum today say Lingang should continue to play a prominent role in innovation.
Large investments of resources are needed to make science and innovation grow faster in Lingang. So Lingang strengthening innovation can supplement Lujiazui's financial strength, letting the two areas grow together.
But the government is still seeking to introduce financial innovations in Lingang special area too. During the opening ceremony at the Lujiazui Forum yesterday, the Chinese Central Bank said it's planning to promote private equity fund reform there. Chen Tong, CGTN, Shanghai.
And shifting focus now, let's check in on commodity markets. Oil prices hitting fresh multi-year highs today, and they suddenly were set for their third weekly jump. That is as expectations of a recovery in fuel demand in Europe, China, and the US grew as rising vaccination rates lead to an easing of pandemic curbs. Meanwhile, gold prices hovering near the key $1,900 per ounce level. They were helped by a weaker dollar and US bond yields. Now, investors seem to be shrugging off data that showed a rise in US inflation, and they're hoping the US Fed will not change its dovish stance going forward. And copper prices jumping slightly but are still on track for a weekly decline as investors worry about possible measures by Chinese authorities to curb a rally in commodity prices. On that note, let's take a short break, still coming up. We're cruising with Tunisia's first robot clearing the trash from the country's coastline. And Nigeria pumps up $195 million to drive out piracy.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
I've been Tunis, Cairo, Juba, Johannesburg, Ethiopia,
Tanzania.
Africa Live. Find your voice.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Now, Now, a group of engineers and researchers in Tunisia have developed the country's first robot, which cleans trash and plastics from the Mediterranean coastline. Now, the autonomous robot can travel for miles from departure points at any port, boat or vessel. While CGTN's Annette Shaushi has more on that robot from Tunis.
This floating vessel was tested by marine and mechanical engineers at the National Institute of Science and Technology of the Sea in the capital city Tunis. The robot is steered from the port by an operator using a controller. 2 solar panels on the top power the machine.
This autonomous robot can clean large areas in a short period of time. The vessel can enter anywhere between boats.
Scientists warn that by the year 2050, the world's seas and oceans are projected to have more plastic fragments than fish. Marine experts say that plastic pollution has been on the rise around the Mediterranean.
Marine pollution is alarming. We can easily see its consequences at any of the beaches in Tunisia and the Mediterranean basin. Wind pushes our trash and plastics away from our shores. We can find our debris in Italy, while trash from Italy is found on the Tunisian coast. The robot will not eliminate all plastics, but it will reduce marine pollution.
The Environment and Quality of Life Department plans to approve the deployment of the device at tourist and commercial ports along the Tunisian coastline.
Tunisia has launched a national strategy to limit plastic pollution from different sources. Our objective is to achieve plastic-free coastlines. Technology is very helpful because autonomous cleaning robots can operate in any weather. The cost of operation is very limited when compared to the deployment of thousands of people to collect plastic on the coastline.
The cleaning system is designed to collect large visible plastic objects, marine litter as well as microplastics. The vessel is fitted with transmitters and sensors, so it can communicate its position to the operator via satellites. The floating robot for eliminating debris was designed to collect trash and plastic and protect the coastline. The development of dozens of robots will be sponsored by the Environment Department and the Ministry of Higher Education and Scientific Research. Adnan Shawishi, CGTN, Tunis.
And in Nigeria, President Muhammadu Buhari has launched a maritime security project in Lagos to tackle piracy in the country's waters and the Gulf of Guinea. Known as the Deep Blue Project, it has acquired about $195 million worth of boats, vehicles and aircraft. Here's CGTN's Deji Badmus with more on that story.
The Gulf of Guinea holds the unenviable record of being the world's piracy hotspot, with Nigerian pirates accounting for the bulk of incidents in the region. According to global maritime watchdog, the International Maritime Bureau, nearly half of all piracy incidents reported in the first 3 months of this year occurred in the region. Deep Blue Project is Nigeria's answer to the piracy challenge. It's the first integrated infrastructure in Western Central Africa to tackle maritime security on land, sea and air.
The Deep Blue Project. The Deep Blue Project is a critical step towards the realization of maritime security in the region, which underscores Nigeria's commitment to providing the necessary framework and the resources in cooperating with other nations and maritime users.
Deep Blue comprises of 2 special mission vessels, 3 special mission helicopters, 4 unmanned air drones, 17 interceptor boats, 16 armored vehicles, over 600 specialized trained personnel with the Maritime Security Unit and the CTI Center.
Nigeria has faced a long struggle battling piracy on its waters. Most of the pirates operating in the Gulf of Guinea come from the country's oil-rich Niger Delta region. But despite several security measures put in place, the country's maritime security agencies have not been able to rein them in.
With the launch and full deployment of the Deep Blue Project assets and the passage of the Piracy and Other Maritime Offences Act 2019 by the National Assembly, the security of maritime space in our territorial waters and the Gulf of Guinea are largely guaranteed. The scope of the Deep Blue project covers Nigeria Exclusive Economic Zone, which is 0 to 200 nautical miles off the coast.
Nigeria is making a huge statement with the Deep Blue project, but it remains to be seen how much difference the new security arrangement will make at sea. If it does, as many expect, then it might only be a matter of time before calm finally returns to the world's most dangerous sea route, the Gulf of Guinea. Deji Badmus, CGTN, Lagos, Nigeria.
And before we end today's show, here's a quick look at Africa's currencies. South Africa's rand rising as much as 0.6% before cutting some gains to trade up 0.2% on the day. Now, its rise was not enough to pull the best performing emerging market currency this year into the black for this week. That, of course, is after a general consolidation in FX markets this week and a third wave of COVID-19 infections in South Africa. Meanwhile, Kenya's shilling edging closer to 108 units against the dollar for the first time in nearly a month. It was pressured by higher demand for the greenback than supply. And traders say it's difficult to pinpoint the sector which is driving demand right now. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.